By now, you have most likely heard about the U.S. military operation in Venezuela and the capture of dictator Nicolás Maduro. But what happened hours later at a press conference is, in my opinion, even bigger news that will have a dramatic impact on the markets in general and on gold and silver in particular. But there is one other metal that I think could be affected even more heavily. We are going to get into all of that in this video as we explore the shocking development that occurred in the overnight hours of January the 2nd. The U.S. military strikes against Venezuela. This is not just a regional conflict, this is a geostrategic reset of the Western Hemisphere. And when the map changes, the money changes. But before we go further, in times of uncertainty, gold and silver are the only assets that have no counterparty risk. They are available. If you want to experience great customer service, check out Summit Metals. Whether you're buying or selling, always do your own research, because markets can be fickle. But to elevate your wealth with a company you can trust, check out Summit Metals using the link in the description below. What we witnessed was a decisive, coordinated U.S. attack on Venezuela. This was not a limited skirmish. This was a decapitation strike in military terms. Officials from the Trump administration have confirmed the operation. Donald Trump himself posted on his Truth Social account. The United States of America has successfully carried out a large-scale strike against Venezuela and its leader, President Nicolás Maduro, who has been, along with his wife, captured and flown out of the country. The operation was conducted in conjunction with U.S. law enforcement, signaling that this is treated not just as an act of war, but as an international law enforcement action against a narco-state. The implications of this distinction are massive. It means the U.S. is not just invading, it is seizing evidence and securing assets. And the biggest asset in Venezuela isn't the cash in the presidential palace. It is the oil in the ground and the potential mineral wealth that has been hidden for decades. The speed of this operation has caught the world off guard. Reports suggest that U.S. Special Forces, supported by naval assets in the Caribbean, executed the extraction before the Venezuelan military command could even organize a counter-response. This paralysis in the Venezuelan chain of command is what allowed for a relatively bloodless initial phase. However, as we know, the initial phase is rarely the end of the story. But it was the press conference that followed that was truly revealing. It wasn't just a victory lap, it was a roadmap for the next decade of American resource policy. President Trump, alongside General Caney, outlined a plan that looks less like a temporary intervention and more like a long-term occupation. They were careful with their words, but the message was clear. The United States is taking stewardship of Venezuela's infrastructure. Why does this matter for your portfolio? Because Trump explicitly mentioned the rebuilding of Venezuela's energy sector. He stated that the oil had been stolen from the Venezuelan people, and, by extension, from the Western markets that rely on stable energy prices. This signals that U.S. energy companies Major Oil are likely already drafting contracts to enter the Orinoco Belt. But here's the catch. Rebuilding takes time. In the short term, this intervention takes Venezuelan supply offline, or puts it into a legal gray zone, where insurance companies will want cover tankers. This creates an immediate supply shock, and in the commodities market, a supply shock in oil often bleeds over into everything else. The president also hinted at a second wave of operations if resistance continues. This tells us that the U.S. military footprint in South America is going to expand, not contract. Increased military spending, increased geopolitical tension, and the uncertainty of an occupation, these are the three ingredients that make up the perfect rocket fuel for gold prices. One thing is for certain. Market experts anticipate a gap-up opening for crude oil, gold, and silver prices. Let's explain what a gap-up actually is, because we are going to see it. In normal trading, price moves in a line up a penny, down a penny. But when news this big breaks over a weekend or a holiday, the algorithms that run the global financial system essentially reset their baseline. When the Asian markets open, usually starting with Australia and then Tokyo, there will be no sellers at the old price. If silver closed at $72.77, nobody's going to sell it to you for $72.78 on Monday morning. The first available seller might be at $75. The chart will literally show a blank space, a gap, where no trading occurred because the price simply teleported higher. This is the most dangerous time to be a short seller. If you are a bank or a trader betting on the price of silver going down, a gap up skips over your stop loss. You don't get out at a small loss. You get liquidated at a massive loss. This forces a short squeeze, where panicked buying drives the price even higher than the fundamentals would justify. Here at Veiled Wealth, we have been warning about the fragility of the paper markets. This event is exactly the kind of black swan that breaks the paper suppression. Let's look at the numbers. COMEX gold closed around $4,330. Silver is sitting at $72.77. Analysts believe silver could touch $75 or even $78 per ounce as soon as trading resumes. Why? It's not just about safe haven demand, it's about logistics. The US-Venezuela crisis jeopardizes the sea routes in the southern Caribbean. This is a critical transit lane, but more importantly, look at the map. Venezuela shares a border with Brazil and is a stone's throw from the shipping lanes that service Peru and Chile. Peru is one of the world's largest silver producers. Chile is the king of copper. If the conflict in Venezuela spills over, if there are naval blockades, no-fly zones, or increased insurance premiums for shipping in the region, the cost of transporting metal from South America to China or Europe skyrockets. Analysts have explicitly stated that the crisis jeopardizes the sea routes that Peru and Chad use. While Chad is in Africa, the global disruption of shipping lanes is interconnected. If insurance rates spike for tankers in the Caribbean, they spike everywhere. This creates a delivery risk, and when manufacturers, the companies making iPhones, Tesla batteries, and solar panels, fear they won't get delivery, they don't care about the price. They just buy. They panic buy inventory to keep their factories running. That is what drives silver from $72 to $80 in a heartbeat. This brings us to the metal that nobody is talking about enough: copper. Copper is the nervous system of the modern economy. You cannot have AI data centers, electric vehicles, or grid modernization without copper, and South America is the Saudi Arabia of copper. With the US effectively militarizing the region, the flow of copper becomes a national security issue. Trump has spoken about tariffs. He has spoken about protecting American industry. It is very likely that a US-controlled Venezuela becomes a strategic hub for securing resources for North America, potentially cutting off or complicating supply to Asia. Experts noted that copper prices are expected to open with a gap up as well. If you are an investor, you need to understand that copper is often a leading indicator. If copper rips higher, it confirms that the market views this invasion not as a quick political fix, but as a long-term resource war. Then there's the China angle. This is the most fascinating part of the puzzle. For the last decade, China has been lending money to Venezuela, repaid in oil and resources. With Maduro gone, those debts are now in limbo. China has lost its foothold in the Western Hemisphere. They are not going to take that lying down. With a naval blockade in place, ships heading east to China or Russia are being intercepted. We know China has a vital need for silver for its EV and solar industries. Recent unverified claims suggest that nearly 850 tons of silver may have been airlifted to China and Russia just before the U.S. intervention. Think about that. 850 tons. If true, that is a massive amount of physical metal leaving the market instantly. It suggests that China knew this was coming and prioritized saving the silver over saving the regime. That tells you everything you need to know about the value of silver in the geopolitical game. And if that silver is gone, sitting in a vault in Shanghai, instead of being available for trade, the global supply just got tighter. But there is a darker scenario. If China feels cornered, if they feel the U.S. is choking off their access to resources in South America, they may retaliate. Not with missiles, but with markets. China could restrict their own exports of refined materials, or they could dump U.S. treasuries. Either move would create massive volatility. Let's discuss the occupation. Trump was very clear. This will be a long-term presence. The U.S. is preparing for a potential second wave of military action if there is resistance. This means U.S. boots on the ground for the foreseeable future. History tells us that occupations are expensive. They are inflationary. They require massive government spending. Where does that money come from? It is printed. War is the most inflationary event in history. So, on one hand, you have a supply shock in commodities. On the other hand, you have the potential for increased monetary expansion to pay for this operation. Both of these vectors point in the same direction for gold and silver. UP, the newly sworn-in vice president of Venezuela, who has capitulated to U.S. forces, will likely establish a provisional government. But legitimacy takes time. Until there is stability, foreign capital will flee the region. The Venezuelan bolivar is already worthless, but this chaos might destabilize neighboring currencies, driving even more South American capital into U.S. dollars and, you guessed it, crypto and gold. So, what happens next? Here at Veiled Wealth, we look at three possible scenarios for the coming weeks. Scenario A is the quick stabilization. The U.S. secures the oil fields. A provisional government is recognized. Oil starts flowing to U.S. refineries within months. In this scenario, the war premium on gold and oil fades, but the silver price likely stays high due to industrial demand and the inflation of the dollar. Scenario B is the quagmire. Insurgencies rise up. Pipelines are sabotaged. The second wave of military action is required. This is the scenario where oil shoots to $100 or $150 and gold breaks all-time highs as the world fears a wider conflict involving Russia or Iran. Scenario C is the resource nationalization. The U.S. declares Venezuela's resources a strategic asset of North America. They ban exports of certain raw materials to China. This triggers a trade war where China retaliates by banning rare earth exports to the U.S. This is the total economic war scenario. In this world, silver isn't just an investment. It's a strategic material that you might not even be able to buy freely. Markets react to emotion, and the shock at the open will be real. The gap up is coming. So, should you buy gold and silver based on what I think will happen Monday morning? No. Emotional trading is how you lose money. If you chase a vertical green candle on a chart, you usually get punished. However, if you are holding physical metal, you sit tight. You watch the show. This is why you bought insurance. You don't buy fire insurance after the house is burning. You buy it when things are calm. If you're looking to enter the market, wait for the volatility to settle. Use dollar cost averaging. Do not bet the farm on one news event, even one as big as this. But make no mistake, the invasion of Venezuela is a signal. It is a signal that the era of free trade is over and the era of securing resources by force has begun. In that world, paper promises mean very little and physical things mean everything. We are going to be monitoring the Asian markets closely tonight. We will be watching the copper futures. We will be watching the oil tankers. Here at Veiled Wealth, our job is to help you see through the fog of war. Let me know what you think in the comments below. Do you think the US will hold Venezuela? Do you think China will retaliate? I hope you found this deep dive video informative. Don't forget to rate, share, and subscribe to Veiled Wealth. Until next time, keep your eyes on the horizon.